podcast today, video podcast. If you look on your control panel, there's a place where you can type in asking questions and such, and they'll appear on the screen so everybody can see your question or your comment, and then we will, of course, endeavor to answer your question or comment. Also, we have a new website, micromomenttrading.com, and the old CSE site, every bit of information that was on that site is on this Micro Moment. It looks a little different, but it's all the same schedule of seminars and what all these gentlemen do, what things cost, how to get the free Cal report. And if you're not getting the Cal report, you need to get it. I send it out every Friday, and you can get it off of the website, www.micromomenttrading.com, or you can still use the older CSE website. We're going to keep that up for a month or so, either one. So, get the Cal reports for free, and it has emails from all our clients. These gentlemen answer questions are in there, and just does all kinds of stuff. It's been published for going on 20 years now. So go to our www.micromomenttrading.com and sign up for that. No new events. So there's all kinds of events going on. One I mentioned to Tony this morning when we were doing the Micro Moment trading session about Costco opened up a new store in Beijing. Where was it? I forgot the city, but in China yesterday. They had to close it by around noon.
Right.
It got Shanghai. Yeah, Shanghai. It got so many people tried to get in the store, it became chaotic, and they couldn't. They had 2 hours checkout just to check out, and they just started fighting, and so the police came and they had shut it down at noon, and so I noticed in one of the notes from the police, it instructed everybody, follow the law, don't ride in the store tomorrow. And they say, don't go if you don't think you can get in trouble. So anyhow, I thought that was interesting. The other thing is of interest is that the hurricane that was heading toward Puerto Rico just missed it. I mean, just went right to the east of it, and just missed it, and it's now head back out there in the Atlantic, and they really don't know exactly where it's going to hit. If it's going to hit Florida or further north, and they say it's one of the most unpredictable hurricanes that they've ever seen. So that was kind of interesting. Today was an interesting day in the market. Up together right now, it's up 237.90 points on the Dow. Nasdaq's up 98.79. We had a good day this morning on our micro moment trading session, about 20 some odd percent return, which was good for the day. 21.72 for the week. We're up 68.41%. Now that probably pales by comparison to Randy and Keith. We have to work awful hard to get up to them, but they've been doing a lot longer, right? So why don't you give us a report of how your week's gone so far, Keith, Randy?
Oh, been going great, actually. The market's still been going up and down, but had a nice couple of big up days this week so far, which is very good. So as you know, Joe, I do two different services for compound stock earners. One is the momentum trade in the advanced charting platinum service, which is a slower version of what Tony's going to talk about. And we had a good week there. The Verizon momentum trade that we entered closed for 5.4% return for a week, and so that was a pretty good one. And that's based on the proprietary chart, the advanced chart from Compound Stock Earnings, which is extremely beneficial in doing any kind of trading to help with your decision process of entry and exit of any type of position that you want to get in. In addition to that, I teach what I call platinum covered calls, which are synthetic covered calls in our covered call platinum service. And a covered call, for those that don't know, is buying a stock and selling a call against it. And we do that for weekly income generation, not for speculative capital appreciation. We're doing it for weekly income generation with return of invested capital. And so last week, closed out, entered and closed out 1, 2, 3, 4, 5, 6, 7, 8, 9 positions. Disney 10.0% for 4 days. The TLT, which is a bond ETF, 6.7% for 4 days. Microsoft 10.4% for a week. McDonald's 9.1% for a week. The VIX, the volatility index ETF, 10% for 4 days. IBM 10% for 4 days. CRM, which is Salesforce, 27% for a day. And then SPY, the ETF, entered twice because SPY has expirations 3 times every week, so you can get in and out, in and out, in and out, and got 12% over the weekend from a Friday to Monday, and then 6.7% for Wednesday's closeout yesterday. And so far already this week, we've already closed out the QQQ for 9% for a week and Costco 5.5% for 4 days. So those are all return of all invested capital. So back to cash in those positions, in addition to that extra income that's cash added to the account. So looking good. And all the positions so far this week, which will close out tomorrow, are all in the money, which is where we want to be.
Which means they're going to be called out. That's fantastic.
Be called out for the return and the capital return, and that's the important part to me anyway. Right now is capital return at the end of the week.
Yeah, let me point this out to the folks listening. When you subscribe to his service or Tony's service or Key service, they do these trades, or real money trades, and you get an email or a notice when they get ready to do the trade, what they're going to do, when they get, and then when they do it. And you just follow along, and you can have the same within percent one way or the other. Probably have about the same returns. We've been doing it a long time. Randy, way over 10 years. I don't want to imply how old he is, but way over 10. I think maybe 15 years. I'm not real sure.
13 years. 13 years. Yeah.
And if you go to get the Cal report, you can see all the seminars he does. He does several live seminars on the internet. And people subscribe to those, and it's just a fantastic service. And you can find out all about it in the Cal report, or you can write us an email, write him an email, whatever. Keith, even though you don't have on a hat, and you got on those big strange ears again, next year we're going to leave you back behind the stage, back behind the curtain, like we almost did this morning. So do you have a story that what you do that it's going to sound good?
Yeah. I'm just amazed at Randy, and now he's been busy. What else have you been doing, Randy?
Well, I've actually been doing some trade the moment as well every day.
Yeah. Okay. Well, don't want you to get bored there. And
yeah, there's always something to do with all the different techniques that we teach at Compound Stock Earnings. There's something to do at any time of the day, in any day of the week. You just kind of pick the one that you want to do, whether you want to be extremely active in and out of positions in seconds with Tony and Micah, or following along with you or me, and it's a couple of days or the end of the day type of thing, or a week or longer with the covered calls. So it all depends on how much time you want to spend, what kind of return do you want to get, and just go with it. And all of us do training of how to do that live during the week, as Joe said, right on webinars that you can watch right along with us and learn hands-on the technique. So it's never a dull moment. There's always something to do.
Yep.
Well, that's true. The and I do the weekly credit spread platinum service, and I do a teaching webinar once a week on Tuesday from noon to 1:30ish East Coast time, and it the mostly doing credit spread momentum trades at the moment that I'm looking for, but the one kind of trade that I had been doing, which is usually I like to be out in a day or two. I just don't want to be in overnight given these gap moves. It's just crazy. And so I've been looking at the short-term ones, and even with the gap moves like this morning, the Dow opened up 35 points, not the Dow, the S&P opened up 35 points up this morning. So it takes a while for the charts to reset, and unfortunately, I just haven't been able to find something that I can get in at the moment. A few times that I have been able to find something, as Joe said, we always tell you what we're doing beforehand, so we got to get the email typed up for that. And by the time I do it, I've missed it. It just, a lot of these are typically on the shorter term ones. I try to be in from 5 minutes to an hour or so, and it just missed the momentum on it. It just, a lot of these, the gap move days, it's tough for the kind of trading that I'm looking for, that I've been studying for here on this, looking at the charts. I just haven't been able to get in. So anyway, it's just the way it is right now.
One of the interesting things between these three techniques, the macro moment trading and Randy's covered calls and Keith's credit spreads, these techniques don't suit everybody. There's somebody that really loves those credit spreads. Somebody really loves those Randy's various covered call things, and then some just love the macro moment. In fact, to show you a good example, we had a name named Frank. I think Tony might know him. I forwarded this email to you yesterday, Tony. Randy was talking that he was enrolled in the macro moment, and that he just wasn't having really good success because he just didn't like the speed of it, and so he wanted to know if he could come back and have Randy's, get back in Randy's service. And he's been with us since 2005, something like that. He's been with us a long time. And so yeah, no problem at all. We can move you out. But that's an example. Something works for everybody, but not all the same ones work for everybody. Or every single one. So you can change them just that easy if something changes. You get tired of doing something or whatever. But and Randy, on those returns, it used to be, again, a long time ago, back in the day, when we first started this stuff, the CBOE didn't, they had rules, and we applied all the rules, and they've never once done anything that discourages our technique or how it's processed. In the meantime, all the trading platforms have improved substantially. Better information, better charting, all the services have improved. A long time ago, when I was in Merrill Lynch, you couldn't get into this stuff. We couldn't even have charts. We had a chart room. You had to go get a big old paper chart, which obviously was not live. But because of all those changes, that's why these returns used to be a long time ago. We projected 3 to 5% a month doing the additional covered calls, and now you make that sometimes 2 or 3 times a week, because they used to just have one expiration date, which was third Friday of the month, and now they have many of the stocks, not all of them, but many of them have expiration dates every Friday, and sometimes 2 or 3 days during the week. So all these opportunities, but we're still same technique. So.
And Joe, one other thing I'll throw in there is the market changes. What really was zeroing in 2 years ago, 3 years ago, it's different now. And so I know a lot of the stuff that Randy has done has sort of changed and gone with the market and the flow on it, and certainly the credit spreads have been that way, and it's just been really difficult on credit spreads the last 2 years. That's going to change. I guarantee that's going to change. Mm-hmm. And it's just, but being able to be cognizant of the issues with it and how all that changes, that's key. I mean, 3-4 years ago, I would have probably just been taking losses a lot in the week. It's like, I don't need to do that now. I'm smarter, and I can recognize some things on what works and what doesn't, and just trying to get that to fit in there right now.
I think maybe those damn ears you have.
It might be.
Yes, right.
It may be because I don't have a hat on too.
That could be it. Absolutely. We have an interesting thing we live down in downtown Fort Worth, right on what's called the Square, Sundance Square, and ESPN's been setting up for 2 days. The Cowboys have their first game this weekend, and ESPN comes down here once a year on their first game, and sets up all the broadcasting stuff. So all the broadcasters will be here, and this will be quite an event this weekend. Let's see, something else I was going to mention. Tony, tell us about how it went this morning with the macro moment trading session.
Yeah. It's been a good week so far. I think we're close to a little over 60% for the week. It's
68.41. Yeah.
okay. Yeah, 68% for the week. So it's pretty good. Really steady results. Nothing too drastic like it was last week when we had. I think we hit over 200% last week because on Thursday and Friday it was very, very volatile, and so. And with micro moment trading, volatility is key. We can still make significant returns on when there isn't much volatility, but the more volatility, the better. And that's what this type of trading feeds off of. So it's been a really good week. Getting a lot of the listeners are getting a lot of good results. I'm not going to name any by name, but we're getting some people that are getting 20 some percent on just one trade, or 10 or 15 or 8 or 9% on just one trades, and they're making multiple trades in a day. So there a lot of the listeners that are giving us feedback while we're on the webinar, asking us questions that are giving a lot of results as well. So they're seemingly enjoying it. We're enjoying it. So it's been a good time. And a lot of cool things are coming down the pike with micro moment trading. So we're all excited.
Yeah, we're trying to get a seminar where it'll be in person, be here in Fort Worth. That on the micro moments, it's only one that has not done one. Everybody else has them. They have them online too. And I do the 2-day. In fact, it's the end of September, I believe.
Yeah,
the 2-day online. So
yeah, that'll be really exciting because it'd be Mike and I's first live seminar. It would be nice to get something under our belts and something we can experience. And so it'll be a good time, and I think we'll have a pretty good turnout too.
We'll have to put some kind of electric switch or something we can shock Micah when he doesn't quit talking, because he talks a lot. And so we would just shoot him with an electric shock.
Like cattle prod.
That's right. And they do 2 sessions, one in the morning, every morning, 7 days a week, 5 days a week at 8:30 when the market opens, 8:30 Central Time when the market opens. Usually last about an hour. Now, all these trades this morning, 21% was done within, it's only done in about 45 minutes because on Thursdays they break off early to come to get ready for the podcast. So it was only about 45 minutes worth of work this morning. And then a lot of times the market warrants, they'll come back for an afternoon session. And a lot of times they have just fantastic returns in those afternoon sessions, but they're not necessarily going to come back. And maybe it'll only be one of them or maybe both of them. But you get a notice via your cell phone when they're coming back. The morning session starts, and then the GoToWebinar stays on there all day. And when they give their sessions, there's a chart up there. The chart that everybody was mentioning a while ago is up there, and you're learning by them doing real trades because they walk through the entire trade. They walk through it. They explain what they're looking at on the chart, and just as does Randy and as does Keith when they're doing their seminars. So you really learn this stuff. It's not meant for you to subscribe to that and pay us. I wish you would, but pay us for 100 years. You're supposed to learn how to do it, and you do learn how to do it because every single transaction is walked through, and you'll see when they don't do something, and you'll see when they get into one and it goes bad. How do you get out of it quickly? That's the key. Unlike Randy's and Keith's service, they don't care what the stock does once they've entered their position. They may be in there, a day. They may be in there 5 minutes. They may be in there 5 weeks, but they have management tools to continue to make profits. Every time that stock goes up or goes down or it turns negative, whatever, they're making returns. So it doesn't make any difference if it goes up or go down or turns negative or whatever. They're making returns. And Tony and Micah don't have that opportunity because there are no management techniques for the micro moment trading. You're in it and then you're out of it. Most transactions they're in and out of 15 seconds, 20 seconds. If it goes a minute, that's a long time. And they learn to get out of positions like that with maybe a 1 or 2% loss. And they get out quickly and you learn how to get out quickly because the key in micro moment, you don't make great big returns. You make 3, 4, 5% of whack, but you do a lot of trades. And Even if you just did 2%, 3% a day, I mean, that'd be huge. If you did one trade a day, it'd be huge on a compounding basis. But so you learn how to get out of positions quickly so you don't have a big loss. And you just learn all that stuff. Same way with all these, but you learn the management techniques with Randy and with Keith, and that's the key to their popularity. So those things, those trades are a lot slower. You don't have to be so move so fast, but also they last longer. So yeah, I'm on the chat thing. If people type in now, do we see it up in this on the right there, private chat, or is that just us?
I think the guests can they have to be logged on to this specific website to chat. But if they're listening through YouTube, they can just comment below the live video.
Yeah, because I know so normally we have people saying things. Seemed like Marcus always had to release something.
Yeah. Do we have any questions from the YouTube? Oh, there we go.
Hey, there you go. Okay, so it's working. Okay, great.
All right.
Let Sue Ann tell me she knows how to do it. She just did it. Let me see if that's her. And we'll address. Okay, they can ask questions. You want me to put them up? Yes. Yep, put them up. We've got one right now to LSV preview. And so yeah, start putting them up and we'll address them. They're always real good. Okay, I guess that's probably Randy. Randy, why don't you take that question?
Okay, it says, what is Randy's total for all his trades this week? I have to add them up. But if you add each individual trade up, it's over 100%. But that's not on the entire portfolio because each of these is just a portion. Only use a couple percent of my portfolio on each of the trades. So based off of last week, the average for the week would be somewhere in the 8 or 9% return for the week. With all the cash, capital is all back to zero or all back to cash at the end of each trade.
The company that Randy was with 13 years ago, he left. They had a buyout, and of all the executives in the company, he was one of the few that could afford to take the buyout and live off the stock he had with the company because he knew how to do the covered calls, how to generate cash each month. And he was one of the few people with that company that was able to do that. And obviously it's been really successful for him. So she says that's the only one she has right now. So anybody out there, if you want to pop in a question into your old chat place there, question place, and we'll pull it up and we'll address it. So 13 years ago, Randy, I cannot believe I've even known you that long. Yeah, but because you've aged, you're not like the guy you used to be. So.
Yeah, you have a DVD of me giving a presentation back in 2008. So I guess I could go back and look at what I looked like 11 years ago.
Yeah, I would find out if we still have any of those DVDs because we'd do it. I mean, first class DVD of the entire seminar over a weekend, and then we'd sell them for the people that weren't able to attend the seminar either online or in person. They weren't much, but they were beautiful, and we had thousands of them made, and we sold thousands of them. I would say if we have a few hundred left or any left at all. So you might let me know if we have any of those things left. We could let people because it'd be interesting to go back and see Randy and Keith and a long time ago, ancient history.
Joe, well, since people can see us, they see us always turning our head, and we're always looking at our charts, and we've got multiple monitors all over because we're still trading while we're doing this. So I just did a trade the moment trade, or I call it trade the moment because micro moment's like 15 seconds. So my trade the moment was 3 minutes and 20 seconds, and I just made 4.76% return on that trade just while we were talking there.
Hey, I just got a note back here from Sue Ann. She says, I think we have every year except 2006. Excuse me. So we'll find out. We'll come up with a really good cheap price, and people take those off our hands because we just have to store them. And that way they can see how things used to be. And they'd be fantastic because they used to be that the techniques were so much more, restricted because they didn't have, as good trading platforms as they have now and everything. So it'd be good to see how it happened in the old days. Oldies but goodies, we'll call it. Okay, why don't you take that question, Randy, from Frank?
It says, are Randy's percentage returns reported anywhere like Tony and Micah's are? Yep, absolutely. In the Platinum service, for all those that subscribe to the Platinum service, they see the returns every single day. So I send out a summary every single night that lists all of the active positions and all of the ones that were closed out that week. And so people keep right up with the exact what's going on day by day.
Okay, great. Oh, hey, there's Tim. There's your star performer today. Why don't you take that one, Tony?
Hey, Tim. Tim's been crushing it lately. He's getting some huge returns on the micro moment side. But he says, hey, Tony, when everything is in agreement on a call trade, do you wait for the tick to break through the upper Bollinger Band before pulling the trigger? Thanks for the results. So when everything's in agreement, I kind of pay attention more to E1 and relationship to the signal line or the blue line. Optimally, if E2 and E3 are still, in the call position pretty clearly, and you can see some range between the lines, then you're just trying to time your entry based off of E1 because E2 and E3 already agree. And now, so E1, you're just waiting for that to cross. And so you want to get, you want to start preparing for the trade, seeing if you can enter the trade just a little bit before it crosses blue or right as it's crossing blue. And then, but then you just also reference what the tick is doing because that's just a good indicator of current time, activity. So you just kind of take, you want to time your entry based off E1, but you want to use the tick as a confirmation to E1 to see, try to predict for yourself if this trade is going to carry on in this current momentum for any significant push or any significant time. So that's how I use the tick and all the lowers. So.
Okay, it's Peter. Randy, that's Randy.
I was muted.
Yeah.
Randy sometimes trades momentum trades in SPX and says it's slower. What does that mean? My momentum trades, which is what was originally called where you're in and out in a couple of minutes. Now it's micro moment because now it's seconds. The charts are moving so fast, but it's still the same thing. I'm using the same charts, the intraday streaming charts, and entering on a rising cycle by a call or on a declining cycle by a put, and in and out of it in minutes. I'm usually not as fast as Tony and Micah. Theirs are seconds, and I'm more like 2 minutes.
Yeah, you're slower because you're older.
That's right. It takes me longer to move that mouse around and stuff.
Mike only in their 20s, and
that's right.
You're in your late 60s. I mean,
yeah,
you just can't do it as fast. So yeah,
it's still good results nonetheless.
Okay, somebody ask us some more questions. I love these questions.
Back to that one question, I kind of want to say that because we talk about SPY and stuff like that. And he was referring to SPX on micro trading. SPY tends to move a little slower than QQQ. It's just so big, so it takes a little bit more to make it move a little faster. That's why it has the 3 expiration dates for SPY is helpful, but yeah, we do get that same question too for micro moments sometimes. So that's why we use QQQ because it's relatively fast and it's rather large too. It's one of the larger ETFs. So yeah.
Okay, somebody come up with a question. Where's our friend, the lady that's you get a lot of communications with during the session in the morning? What's her name?
Oh man, there's a lot of we got.
I think she's on here. She should be on here today.
Yeah. Kathy's a regular.
Yeah.
And then we got Tim and David and Frank. Doug says, anxiously awaiting the micro moment seminar dates. A lot of thumbs up there. Is it necessary to master any other techniques before learning micro moments? Any advice or study material that would help?
Go ahead.
Go ahead, Joe.
Okay, yeah, no, these are all independent. Like, you don't have to take Keith's to take Randy's, or Randy's to take micro moments, something like that. Because once you take that seminar, I mean, you may have some overlap on some of the basic rules, but they're all different, and you learn everything you need to know when you take that seminar. My personal preference is that people don't try to do too many of them, because you get confused. And we find that, like in the micro moment in those morning sessions, we tell people, either do QQQ or Apple. That's all they do. They don't do anything else. Don't try to do both of them at once, because these guys move fast. And Randy's got certain stocks, or certain ones that really work well, that he's learned them like a little kid, learns, like a dad learns his little kids or something over all these years, because you can almost predict them. I know Keith can. Keith does a good job of doing that. And so.
Yeah.
Keith also wears a skirt when he comes to those sessions. So it's always interesting.
Kilt. I'm not a cross dresser.
Yeah, it's a kilt. Okay, I got you. Okay. There's Al Mayo. Go ahead, Randy. Randy?
Okay, Al says, how much time a day does a person usually spend trading with covered call trading? That is all dependent on the person. So it ranges from, you can do very little time if you're buying the stock and selling monthly calls. So you'll be in a position for 2, 3, 4 weeks before any outcome, or all the way down to, you can be in and out of positions in the same day on using the weekly options, and getting in at the bottom of the channel and getting out at the top of the channel. So it's really up to the individual person of how much time you want to spend, what type of returns do you want to try to get, and what time of day that you want to trade. So covered calls, the traditional covered call, which is buying the stock and selling an in the money call for the near month to generate 3 or so percent return. You could do that at night. You can look at the charts and place your trades at night. You could work all day at a job and then come home and generate income. That's how I started back in 2006. I was working full time, and so I could only put the orders in at night. And so that doesn't take a lot of time, probably about 30 to 40 minutes a night, just to keep up with your positions on the charts. Or you can spend almost all day looking for positions and getting in them and closing them out at the end of the week. So it's really up to the individual.
We used to say a long time ago that the traditional covered calls, which Randy still does some traditional covered calls, you could literally on the after the Monday after the third Friday, you could enter a trade, cut off the computer, don't look at it until the third Friday comes along, and you're going to make money because, number one, you bought the stock, you sold the call, you made money instantly. It's in your account. You can pull it out and go spend it. And you learn how to properly construct a position where if you get called out, you're going to make additional money because you're going to make the money in the strike price. You've already got your cash money, and you don't need to even go back and look at it until the Monday after the third Friday and see if you were called out or not. And so you might spend, you may spend 30 minutes a month, and that's the day, and you only do it at night, just like Randy was having to do it. The most active one is, of course, micro moment trading, and Micah and Tony spend, let's say, on average, an hour a day, so 5 hours a week, and produces all those trades and all those returns. Keith, what about yours? Are you sort of like Randy's on those entering positions?
I'm sorry, I didn't understand the question, Joe.
I was talking about how much time it takes to use one of the techniques, and Randy was talking, you can enter one trade a month and, not do anything after you end the trade,
Yeah, typically I have my charts open, the CSE charts open all the time, and I just occasionally look over and see if it looks like we're getting close, then it's going to take some more time. But just to scan it while I'm doing other things, I don't have to be looking at the chart the whole time to try to find something to open there. So
yeah, this isn't a day trader. None of these are real day traders, even though Mike calls himself a day trader, because they don't sit there all day. They make a lot of money in 30 minutes to an hour, as y'all all do. So you don't have to sit there all day. You don't, and you also don't lose 85% of your money. That's what the CBO claims that most day traders lose 80 to 85% of the money. So, anyhow,
I want to finish answering that one question real quick about, I think it was from Doug, what study material to use for anticipation for this upcoming seminar. And a good starting point is that Advanced Charting Techniques for High Probability Trades, written by Joe and a couple other authors a couple years ago. I think it's chapter 9 through 11 has mostly to do with they call it TTM, trade the moment, but now it's called micro moment. So those are the ones that are related to what we do on the micro moment. So that's a good, just material to have to reference constantly, to go back. I still reference it sometimes, for micro moment trading. But yeah, we appreciate your anticipation to get in on the seminar. It's going to be a limited opening, so whenever we get the information available to you guys, move quickly.
Yeah, Tony and Mike are working on the slides and stuff right now that'd be used for the seminar, and we have not come up with the date. We know it's going to be in Fort Worth. It's going to be one of two places, either City Club or it's going to be over at the Omni. But we need to let them get their stuff done. And the reason we're going to limit the participation on this very first one is we don't know what kind of questions you're going to ask when you hadn't done one. You can't have 5,000 people come in there and you've never even done it before. So we're going to really fine tune it with that first deal. Now we'll be simultaneously online, and so that could be a whole lot of people online. But the ones in person, the ones that would scare Tony and Micah, physically threaten them, something like that. We don't want to do that. So
yeah.
You got some more questions? There's one, Peter.
All right. Tony, if you enter a textbook trade, everything corroborating and tick immediately turns against you, what do you do? So that's a difficult question, because if everything is a textbook trade, you should get a winner. Because how the charts are set up, if E2 and E3 have some, a good clear range and either a put or call position, and then E1 is also in a clear direction on E2 for a call or a put, it's very hard not to get a winning trade. But in a sense, if some news comes out and it just immediately tanks and it just does a complete reversal of the position you're at, then you just don't waste time. I mean, usually when we're in a trade where it just kind of stalls, and it's just stalling out at that right at the entry point, or maybe it's 1 cent lower or 2 cent lower than where we entered, we just immediately get out. We don't wait for it to turn around. We don't wait for it to be. And sometimes, we get out of trades sometimes early and we miss out on a lot of potential trades. But the whole point is we're not trying to we're trying to manage our losses. So the consistent, good approach to getting in and out of these trades as quickly as we do is to manage the potential loss. And if it's stalling for any amount of time, or if it's stalling out at 1 cent lower where we enter at, then we just pull the plug. And a lot of times it turns into a positive direction where we just got in a little too early, but we don't take that chance and we just wait for the next setup, because a lot of times the occurrence that happens in these trading, in these charting, happens so often throughout the day with micro moment trading. And so there's going to be another opportunity, and we're not too impatient to get a certain percentage every single trade. And we do have a profit target every certain trade, but we are. It's more important to hedge and to manage losses and that's how you're going to be successful in the long run for micro moment trading.
Yeah, I can answer it even more simply. When you see a negative on there, when you see that trade you got into turn negative, I don't care how small it is, get out of it. That's what they do. That's what like on Apple trade today, Micah had a losing trade 2.28%. That's more than he usually loses, but he just got away from him. But then he also turned around and had a plus 7% Apple trade. So
we have a lot of washes too, Joe.
Yeah, you had a wash today. Yeah, wash today. A couple. One wash yesterday, but here's a QQQ that yesterday that Tony had a loss on, but it was less than 1%, and then Micah had a wash, and less than 1% on the loss. But then again, they had some huge percent returns. We ended up with 19.58% for the day. The previous day, there was a wash on QQQ and a loss on Apple of 1.03. That's usually if that's about what it runs. If Micah, gets, if he lets it wait too long. But many times, people will come and report they got out of a position that was a wash or a loss, and people for reason didn't get out that quick. It turns around and has a huge profit, which is fine. Hey, don't worry about that. The key to the micro moment. Again, this doesn't happen in Randy's trades or Keith's trades because they got management tools. We don't have management tools. The trades are too quick. That's why they're micro moment trades. And you see any kind of loss, get out. So you don't think about it. Your question would have implied you think about what tells you to get out. Tell you what, when you see a minus, you get out of it. You can be colorblind. You can have all kinds of elements. You can still recognize a plus and a minus. So rarely ever. This one today was a huge percentage-wise compared to what it normally is lost, 2%. So big. Yep.
And I think that trade turned into a positive one. He re-entered later down the road, but that's just a good management technique for trying to hedge losses.
And when you started out, when both of y'all started doing this, it wasn't unusual to have a 20% loss. Well, shoot, with no more than you make on a trade, like 2 or 3 or 4%, which is huge for a trade that you're only in, a few seconds. You can why a whole day with just one loss. So y'all learned, and you still don't have them anymore. You learned how to get out of them, which is simple. You see that minus, you get out of that sucker right then. So okay. Any more questions? Any other questions? I will endeavor, and with Sue Ann, we'll come up with the years we have on these and what seminars they are. We'll get something out and come up with a price. People want to buy any of those old DVDs. They're still in there. They're still original. I mean, they're still in their little DVD packets and stuff. But there really should be some interesting stuff to look at. Don't forget to go to our website, www.micromomenttrading.com, which has the original CSE website in there also. And right now they're both standing up. Sign up for the Cal report. What else we got going here? Anything you guys want to say? Nothing. Okay. Well, I guess it's been about 45 minutes now. It's about where we've been running. So we'll cut it off here. Sue Ann, thank you for being our engineer today on this. And we'll give a couple more seconds. Anybody got any last question before we cut off? Don't see any questions. Okay, Keith, thank you. Randy, thank you.
Have a good weekend.
Stay safe, everybody.
Yep.
Sue Ann, bye.